Should you buy Apple stock? Apple has a market cap of $2.39 trillion. With $21 billion in cash and $100 billion in debt, the company has an enterprise value of $2.47 trillion, and the company also has $31 billion in short-term investments. Revenue over the last 12 months is $388 billion, with $95 billion of net income and $98 billion of free cash flow. That means the company is valued at 6 times revenue, 25 times earnings and 25 times free cash flow. Although 25 times earnings is lower than the 40 times PE that Apple traded at in 2020, it's still quite high and around 30% above the historical average. Looking at the revenue mix, Apple now drives 80% of its revenue from products and 20% from services, but the iPhone is still the main driver, representing 50% of total revenue. Naturally, Apple products have a lower gross margin than services, but Apple's powerful brand means the company is able to charge higher prices for its products than its competitors, and services brings in a fast-growing and high-margin segment into the company's revenue mix. The last couple of years have been difficult for hardware companies, and Apple has faced high cost inflation and a number of significant supply chain issues. Trade tensions with China and COVID lockdowns have affected Apple's production lines and caused the company to move some of its manufacturing to Vietnam with the help of Taiwanese supplier Foxconn. Despite these headwinds, Apple's production and revenue has been relatively stable, with revenue falling only 2% last year and net income dropping only 5%. In fact, gross margins even increased from 38% in 2020 to 43% in 2022. This performance is testament to the strong management team at Apple and its powerful brand. The $2.4 trillion valuation of Apple stock is supported by healthy free cash flow, a dividend of 90 cents and significant share buybacks, which inflate the earnings per share. However, Apple's size inevitably affects growth. 5-year revenue growth is now clocking 10% and net income clocking around 13%, which is slightly lower than historical averages. If you assume Apple can continue to grow earnings at 15% per year for the next 10 years and then trades at 20 times earnings, that would put the company at a valuation of $7.7 trillion. But the investment return on that would only be around 13% per annum. Overall, Apple looks pretty fairly valued here, which is why I give the stock a neutral rating. But these are my personal opinions, not financial advice, and I do own some Apple shares. For more detailed investing ideas, make sure to visit our website, overlookedalpha.com.